Chapter 11, Reporting Entity and Component Units. Our coverage: why the makeup of a government's reporting entity is an issue, the criteria that the GASB has established to determine the units that constitute a government's reporting entity, various ways of reporting component units. So go over the slides and go over this presentation. Know the exercises and problems listed very well. These are ones that are part of Chapter 11 as either student practice or instructor narrated practice. Reporting entity. Why is the reporting entity an issue? An organization's legal entity may differ from its economic entity. The composition of the reporting entity includes the primary government, the creating government, the component units, the created government. Primary government: any state government, general purpose local governments, or a special purpose state or local government. A special purpose government must have a separately elected governing body, be legally separate from other primary governments, be physically independent of other governments, and have the authority to determine its budget, levy taxes, and issue bonds. The component unit: this is a legally separate government for which elected officials of the primary government are financially accountable. Exclusion of component unit might cause the primary government statement to be misleading. This is why this is a critical auditing issue, and it's a critical issue for the state and local government to determine what is the reporting entity. The primary government plus these component units. Critical issues. The criteria for reporting entities. The key criteria as to whether a primary government is financially accountable for another government, thus qualifying the other government as a component unit. The primary government appoints a voting majority of the unit's governing body, and the primary government is able to impose its will on that unit, or there is a potential for the organization to provide specific benefits, financial benefits to, or impose specific financial burdens on the primary government. So this represents the criteria for making this determination, the primary government, and then looking at the component units. Primary government is able to impose its will on potential component unit if it satisfies any one of the following. The primary government can impose its will if it can remove appointed members of the component unit's governing board, if it has the authority to modify or approve the component unit's budget, if it can approve or modify the component unit's fee charges, if the primary government can veto, overrule, or modify decisions of the component unit's governing board, or if the primary government can appoint, hire, reassign, or dismiss the component unit's managers responsible for day-to-day operations. So you can see as you look at these 5 items, it is obvious that these are indicators that the primary government is able to impose its will on this potential component unit. The component unit is able to provide special financial benefits or impose special financial burdens on the primary government if the primary government is entitled to component unit's financial resources, if legally obligated for or assumed obligation to finance the component unit's deficits, or is it's obligated to support the component unit's operations, is obligated in some manner for the component unit's debt. So see, this is the primary government owing something or responsible for the component unit. And you can see how it would be misleading if these were not included in part of the CAFRA. The criteria for reporting entities. The general rule: potential component unit is physically accountable to primary government if the primary government controls appointments of its governing board. The GASB provides an exception. Even if the board is independently elected, the potential component unit may be considered financially accountable if it is physically dependent on the primary government. The component unit is physically dependent on the primary government if it is unable to determine its own budget, levy taxes or set rates, or issue bonds without approval of the primary government, and there is potential for the component unit to provide such specific financial benefits or impose specific financial burdens on the primary government. So again, we're looking at this interaction. Should these be put together in the CAFRA, because exclusion of the component units would be misleading. So how do we report the component units? There are two methods. The discrete presentation is the default means of reporting. This reports units in a single column separate from the data of the primary government. So these are discrete, they're completely separate, they're just brought into the CAFRA for reporting purposes. Take a look at the government-wide financial statements to see this single column showing the discrete component units. The other method is blending. Transactions are treated as part of the primary government. The activities are just blended together. This is appropriate only in the following three conditions. The component unit's governing body is substantially the same as the governing body of the primary government. The component unit provides services solely to the primary government. Total debt outstanding is expected to be repaid entirely or almost entirely with resources from the primary government. In this situation, these are component units, but their activity is so closely intertwined with the general government, primary government, that they're just blended together for the financial statements. This is a flow chart from the text, figure 11-1. Go through this. It gives you the steps to determine, is this part of the primary government, and if so, should this be reported as blended, just brought together with the primary government, or should this be a separate, discrete presentation? Component units were discussed in Chapter 9 because some cities will carry out these activities as component units, and other cities will do this as part of enterprise funds. The main difference is the legal structure. Component units are separate legal entities that are economically intertwined with the government, albeit legally separate. Criteria to determine whether a primary government is financially accountable for another government: primary government appoints a voting majority of the unit's governing body. A majority of the unit's governing body is composed of primary government officials. The primary government is able to impose its will upon the unit, and the unit can cause the primary government financial benefits or burdens. So this is just sort of a wrap-up of how we get to determining a component unit. If it meets these criterion, then the unit is a component unit of the primary government. We looked at the two presentations. Blended. The component unit is simply consolidated with the primary government in the government-wide statements. It's presented this way if the component unit provides services exclusively or almost exclusively for the city. Discrete. The component unit is shown in a separate column in the government-wide financial statements.